cycle, 60 days or 57 days in this case, double bottom, slight lower low, and then we went off from the bottom of the range to the top of the range, and Bitcoin essentially more than doubled in that 2-cycle period. We don't know what's going to happen after this, okay? And that is analysis for another time, looking at the very long-term trend. For now, just navigating this next piece. Again, what we're looking for, hopefully, is more the blue path, where we just hold this area, we form support, and ideally, we would like to see the S&P 500, and I'm going to show you that real quick. We want to see some divergence from traditional risk markets. So we would like to see this decline in the S&P 500 down to make a lower low. It already has a failed cycle. So here's the equivalent in Bitcoin, where it formed its low around 33,000. The S&P 500 came down, and the midpoint made a lower low and didn't really bounce so much. So even the bounce didn't come back up to test the high. So as you can see, day 7 high for the cycle, Bitcoin has a day 13 high, much weaker. So they're already diverging from the risk markets in Bitcoin. But we would like to see S&P 500 come down and make the same time frame low, 40-day cycle low in that March 20th time frame, another deeper low. At the same time, I really would like to see Bitcoin, let's go to it again, hold this level. So as the S&P 500 makes deep lows, Bitcoin just continues to hold and find support and buying. And in this 60-day cycle low, come out of that point and we move higher. So again, from a strategy standpoint, right, the trades on the short term for traders are more to the short side, even though we're now back towards support. A better short obviously was near this double top. A bounce out of this level probably encourages another short down into the 60-day cycle low. Investors, active investors, longer term investors, I've already made it very clear on strategy, and I said this is where you wanted to make those decisions on lightening up your portfolio. Yes, it's only down, well, it's down 10% in fact from that level, but still we can see a move down into the $30,000 level. This is where cycles can protect you. If you have a position that you cannot handle seeing at 29,000, then make the decision at 39,000. Again, it's the same message. Make decisions on your terms as much as possible, not on the market's terms. That's how you preserve capital over time. So very, very clean analysis, I think. I think the cycles, even though we're in a decline, cycles work both ways. They help on the declining and define declining structures, and same for the rising as well. So it's now very clean. Any surprise move upside that takes out this 45,000 level is not very clean from a cycle standpoint, not something you would see. Cycles are fairly predictive, but they're far from perfect. But in this type of scenario, it would be very unusual for a move now up above 45,000 before the 60-day cycle low. I can see maybe in this March 15th, March 16th timeframe, around day 52, some type of surprise move. And then in that case, I can make the argument that we've had this shorter duration 60-day cycle low, and the market is just screaming to move higher, and there's a lot of buying that's driving it early. But right now it's a little too early. I think we need to come back down and test these lower levels, form a possible low early in the early 50-day time frame. That's about the earliest we can come. So right now we've got this level on top here that should not really be exceeded until we form the 60-day cycle low. Is the red path necessarily horrible? No, not really. I mean, 60-day cycle lows give you an opportunity to make action. So even this red path, and on the weekly, right, which is this, on the red path, it's really just coming back down and testing the bottom of this range. And if it can come down there and reverse out of the 60-day cycle low, then there still could be a good opportunity to make some moves on the short-term trades up from here. But also in the long term, once we see a clear evidence of a 60-day cycle low, you can probably load up here a little bit, right? And get overweight perhaps. And then that 60-day cycle low is your get out point. So there's a very well-defined stop point if you got in at that level. But you still have to respect right? It's not an arbitrary 30,000 I'm buying or 29,000 I'm buying. It's a 60-day cycle low that you're buying, which means you have to wait for the low, you have to wait for the reversal. And if you look at it from a daily, that may mean coming back up to a higher point because it takes time to see confirmation that a 60-day cycle low has formed. Let's take a quick look at Ethereum because I know that's the other one that really drives a lot of this market and looking a lot weaker, right? Because as you can see, the move out of the mid-cycle low did not really double top. It didn't even come close to testing that level. So it's leading, and that makes a little more sense. There's a lot more sort of volatility in Ethereum and the altcoins, higher beta to Bitcoin. So if Bitcoin's heading lower, which it looks like it is, then there's a really good argument to be made that Ethereum is going to probably test its 23 level, maybe even by the end of the end of the cycle in March, the 21 level. And again, just like I said with Bitcoin, some pretty big downside targets could be had, and down to 1700, right, which is the bottom down here in June, where Bitcoin actually hit, and its equivalent is on the table. So just be aware of that and make your plans accordingly. Now, on the upside, again, just like Bitcoin, you've got this level at around about 3,200. Above that, then it's sort of open sky, and then we can start to get really bullish. And you could also make an argument that you can get a lot more bullish above the recent highs right here at $3,070. But until we get above that level, look, it's downtrend. It's all in a downtrend. Look at the 10-day moving average. Same on the weekly. It's all trending lower. So don't be biased in your position. Yes, we're all bullish on crypto. We're all bullish probably on Ethereum and Bitcoin. But we're bullish on a longer time frame. In a shorter time frame, there are headwinds and there are risks. So just always keep, when you have an opinion on the market, always ask yourself, okay, what is the time frame on that opinion? Because I can be very, very bullish on a longer time frame, and I can be extremely bearish on a shorter time frame. So it's important to understand if you're making a trading decision or investing decision that you understand the time frame and be willing to accept all that happens in between that time frame. So if you're looking at a 2-year investment, then you don't care what happens next week or next month. But if you're trading on the short term, then you care what happens on that time frame. So that's very important. That's your update for today. Hope you're informed. Again, thanks for being here. Have a great week ahead. Let's see if we can do a report probably on Tuesday. In fact, I know Big Cheds has invited me to do a long form, I think it's a long form kind of interview tomorrow on YouTube, on his YouTube channel. So check that out as well. Hopefully that'll be fun. So take care and all the best, guys.